streakiness in the bond markets. We're going to talk a little bit about streakiness in the bond markets. Let's go to the first slide. Bonds are now on their 7th down day in a row. If they close this way, it will be the second occurrence this year. So
second occurrence of
7 down days in a row. There was one earlier, I think it was in April or something like that. The interesting thing about this, or maybe it was like March, it was one of those things. April, May, whatever. Anyway, point is, it doesn't happen often. And what we're going to talk about is, okay, well, we've talked about streaks in stocks. We haven't really talked about streaks in bonds. It hasn't really been relevant, really, because bonds have kind of been trading in a range for a long time. Kind of, they've been up and down, but we rarely see streaks like this. So I kind of want to see, okay, how often do they happen? What can we expect? So let's take a look at the second slide. This is what we're going to answer. How often do streaks like this happen? Is there a larger probability of up streaks or down streaks? What has happened to price on average 1 month, it should be 1 week after these streaks? And is bond market implied volatility affected by these streaks?
Okay.
Okay, so let's go to the next slide. Take a look at the study. So we're going to look at ZB since 2016. We're going to look at the daily price change, implied volatility. We're going to look at the historical frequency of 4, 5, 6, 7, or 8 up and down days in a row. Recorded the implied volatility after the streaks, and we're going to record the average price change 1 week after seeing the streak. So
how many days are we now? 7?
We're at 7. You ready?
I'm ready.
All right, let's take a look. Number 4. First one, streak of number of days. Historically, since 2016, there have been 53 streaks of 4, 47 down streaks of 4. And then as you go obviously closer to 5, 6, 7, where we are right now, there have only been 5, sorry, showed 3, 5 7-day up streaks and 5 7-day down streaks. Notice, Tom, under the column 8, 0, there have been 0 streaks of 8 down days in a row for bonds.
And that would be tomorrow, though.
That would be tomorrow. I did not plan this, by the way. I was just thinking we should do a study on streaks and bonds because it's the 7th down. But when I looked at it, there's 0 streaks of 8. So maybe there's a little something to this short TLT put. Okay, there was no directional bias.
I've been buying bonds here, so there's hopefully there's something to that too.
There was no directional bias in the streaks. That's one thing to note, meaning that they were distributed roughly the same between up and down. So there's no like more streaks of up days versus down days. They're all pretty much equally distributed, which you would expect with a normal distribution in general. So there's no surprise there. So there's some context for you.
I like it. I mean, I would rather be on the side where it says 0, side where it says 53. So, I mean, you know, that's clearly where we are right now. And and I have to tell you, the bonds really haven't done much today at all.
Yeah, I know.
We've scalped them pretty good, but they haven't done much.
I really hope tomorrow will be an update, because if not, I'm gonna look like a total idiot right now. All right, let's go to the next slide. I'm staking my reputation on this, Tom. All right, after an up streak, here's what happens after a streak. So basically the next week, which is 5 trading days, what happens 5 days after a streak of the same amounts? And what we see is after an up streak, the next week does actually look a little bit more bearish. So if there is a streak of 4 or 5 or 6 or 7 or 8 up days, there does tend to be about a 1 to 2 point drop in the bond market the next week. However, unfortunately, when you look at the down streaks, there doesn't seem to be much of an indication that there would be an up week next week. So what this means is if like bonds go up, the next week there's a good chance it may come down a little bit, but on the downside, they kind of maybe hover over there. So, you know.
Throughout the years, I have found bonds to be very streaky. You know, it feels like they're streaky when you're trading them. And so you got to be careful about getting, you know, involved too quickly.
Right.
But yeah, this doesn't bode well for the end of the streak.
Right. Now, like in this, it seems kind of contradictory to the last slide, but it's not really, because this is looking at the next week in aggregate versus tomorrow being an up. Like if tomorrow's an update, doesn't mean that next week bonds will still be higher, right? So there's that to look forward to. Okay, let's go to the next slide, number 6. Now this is implied volatility, and this is kind of interesting. Implied volatility in bonds does not seem to be directly affected by streaks unless they are extreme. So this is consistent with what we know about bond implied volatility and how it's not directly correlated with price. So unless you have like a streak of 7, you're not really going to see a pop and vol.
What are you trying to say here? What does this thing do? Like you're saying that the vol here, where's bond vol right now?
Well, Ivy ranks popped up
Not IV rank. Where's the actual vol?
Tony, defer that to you.
Well, let's take a look here. Bond vol, it's going to be in the teens. It always is. Let's call it, I don't know, 14, 13?
So look at
14.
TLT.
Yeah.
I I cheated a little bit. I used TLT.
It's going to be
Volley
the
is the
November
vacation.
Use T for this?
18, October's 13.
Yeah.
So, yeah.
So
Yeah, use 18. So it's kind of like right mid-range here.
it's mid-range. Yeah, all it is saying it's not that correlated. Like if you get to 8 up streak, like 8 up days in a row, you get like a little bump. But there are only like 3 occurrences, or like 4 occurrences. So it doesn't really correlate that much.
There's nothing to draw from the
Right.
vol. Yeah, I got it.
Right, which is what you'd expect. Like if there was equities, it would totally go up as market up or down. But this is not the case. So this is for people to know. It doesn't trade like equities. So let's go to the next slide. Final slide. So bonds have not had a streak of 8 down days in a row since 2016. Don't know what it was before that. So and there does seem to be some price reversion in quotes after a streak of up days, but not so much after a streak of down days. And volatility remains independent of price unless there are very, very long streaks in price, which in that case, IV does tend to be a little bit elevated. But again, nothing like equities were obviously.
So the takeaway from this is that since we haven't had 8 down days in a row, tomorrow, if it's an 8th down day, would be kind of a once in a very rare occurrence, once in every 8 years, let's just say. But there's no kind of history of any kind of real bounce back in price, regardless. So even though we might break the streak of 8 down days in a row, we might not get an up move of more than a couple ticks.
Exactly. I couldn't have said it better myself.
That's why we needed you here today, just to enforce that. But I mean, that's really what you're saying. And there's no volatility play per se here.
That's right. There's no vol play, and short of a very short contrarian scalp, you're better off just going slow and steady.
Well, I was buying the bonds the last couple of days, not because I thought they were going to be down 8 days in a row, but because I thought, it wasn't so much the 8 days in a row. It was more that just the magnitude of the whole move. The 8 days have still been where we are right now in the bond market is 120.08 is over 7 points lower than the high. So 7 points on a $120 index is basically 6%.
It's huge.
And when you look at the bond move, the average monthly move, and again, we're talking about 7 or 8 days. The average move in here, let me just go to a ZB for a second because I don't want
To figure out. I mean, the daily moving bonds, I don't know, less than 6.
Well,
I mean, you said in ZB, right, the IV was 14, which is essentially a 14% for the year. And we did almost half of that in a little over 2 weeks.
The expected move for the expected move in bonds going out till next May, okay, of 2025.
7.5 points.
7.5 points. We just moved 7.5 points.
Yeah, so over half a year.
That's the point.
We just moved 6 months in 3 days.
That's right.
Oh my God, are you getting long bonds?
No, but I mean,
Should have done that 95 put, now the 93 put TLT.
I'm already long bond. Now they're making new lows for the day right now.
That's crazy.